All right, welcome people. Happy Friday to you guys. Welcome everyone as you're jumping in. All right, I have quite a few things to show you today, and definitely, of course, we had the NFP results, which we're going to have a look at in just a moment. But before we do that, I'll give you guys one more chance to get in, and then we get started. All right. Let's have a look at the markets and see what they have to, or what they've offered us. Well, in my time anyway, the markets really are done by 6 on a Friday, unless you're swinging a trade. So welcome on. Welcome on people as you're coming in. All right. All right, so without wasting any time, let's get straight to it. So welcome guys to this live analysis session. Today is an interesting Friday, the 8th of October. Let's put this here. All right, I want to definitely record this as well. So again, welcome everybody to this Friday, the 8th of October. So NFP week, guys. So it's been an interesting one on the dollar. And I believe that what I discussed with you guys, if you listen to me, should have protected yourself quite well. We had a strengthening and a weakening, and then a weakening and a strengthening. What do I mean by that? Well, let's take a look. So I want to use pound USD here, which is currently pushing so disrespectfully short. And I just came out of the trade for a short, but on my funded account, I actually can't hold trades past 6 o'clock. But let's just have a recap here. I've got so many boxes and stuff marked out that it's not going to really make too much sense as to what's going on here. Well, pound USD has presented one of the greatest opportunities we've seen in a very long time. And from what I'm looking at with the market, I think it's very clear the market is giving us a very important signature that we have to pay attention to on the dollar. Number one, the dollar is definitely going to gain massive strength, artificially anyway, over the next year or two, especially into 2023. Now, why am I talking about pound USD? Well, pound USD as an opportunity is a fantastic one. We've had a 10-month demand order block, which has been holding the price, which we had a close for the first time when last week, as soon as we entered into Q4. As I said, when money shifts hands every quarter, major things always happen at the beginning of that quarter. Now, 2020 and 2021 are not years like the others, but what we've had the close above here and a return to the other side. Now, if I go to the daily structure, if you remember what I said, there's a demand zone here on the daily. And if I go to the H4, I can hone this into this region right here. Same thing. Now, I'm still kind of annoyed I closed my trade. I probably shouldn't have closed pound USD short because I knew the price would do so. But what have we had? So we've had an interesting week going forward. All right. Pound USD has just come for multiple highs. Now, the specific NFP news, okay, came out worse than expected. What are the odds of that? All right. Now, the ADP results, which we talked about on Wednesday and on Thursday, wasn't as a fact. On the ADP news on Wednesday, what we had going on was a positive outlook. But I always told you guys that there's always that percentage that you need to have in mind that the price can do something that you're not expecting. Now, the price has just gone short after I've closed there. I took a little bit of profit, but I'm just kind of annoyed with myself that I closed right now. But I know I can't swing this trade on my funded account either way. So I would have just had to take whatever profit was available and run with that. Now, the price is now pushing short. Okay, we're seeing about, it's not a lot of pips, but price is moving short. Now, my original entry that I had was somewhere around here. So I would have liked to grab that same entry. Now, let's look at the NFP results here as to what happened from the price point perspective. So here it is. I'm going to use the 5 minutes so that we can have a look. So here's the 130 candle. So we had a spike long of about 36 pips. All right. So what does that mean? That US dollar became weak. And then we see now a reversal in strength. That's exactly what I said will happen. Why did I believe that was going to happen? Well, with the current structure of price that we have across many US dollar pairs, it would be the wisest thing for us to have that kind of movement take place. So the real movement is actually the short. And if you notice here on the 5-minute, the market structure was broken on the bearish side. And so this return right here really was the entry. And I think I closed it short because I know I'm going to have to close soon. And it wasn't really doing much. So I thought I'd re-enter on Sunday night. But I believe the pound fundamentally is going to be a very strong short. And from where it is right now, even though it has done, a few pips, and I wish I was just in, from what I can see here, this massive signature here that we've just had is a very strong sign we're about to see massive shorting on the pound, which is supposed to happen anyway. I mean, from the monthly structure here, we've had market structure break of, many of these swing highs here. So it's about time the price pulls back. And I'm expecting to see a pound dollar or the cable to be at $1.30. I mean, yeah, $1.30 for £1 sooner or later. Now, this shorting we have here, usually with Fridays, there's usually a re-entry on Monday. So I'm not going to get too fast and worked up, even though the price is moving uncomfortably short at a very obscure time of the day. The UK session ended at 4 o'clock, but yet the price is still going short. So this is US dollar activity here. Across the board, if we look at USD CAD here, USD CAD is starting to show signs of reversal. So what did we have? USD CAD actually took the low of the previous month on its way down. And now it's starting to reverse here near the end of the day, which is very interesting to me. I think, if you think about this logically, if I go back to pound USD, is an obvious short. However, I think one of the things the market did here, and this is why I believe that the pound is definitely going to have a very strong short, and hopefully there should be a pullback. So it's not the end of the world, guys. I'm looking for some sort of pullback into supply and then after a short. But one thing I would say when I look at pound USD is, if you think about the timing, now, depending on where you are in the world, it will be different. But for me, the London session starts in the morning from around 7, 8 in the morning for me, from London and from the UK. And the US session starts around about 12, 1-ish, around that time. So if we do some maths here, for a fact, in the UK, the London session ends at 4 p.m. GMT my time, okay? Now, from 4 p.m., let's have a look at the price action here. This short that we're seeing right now in the price, when did that start to envelop the charts? Well, if you look at some timing here, and this is why understanding liquidity timing, as I said, is an important feature of being a trader, if you want to put it as down as features. So we see right here, this is 355. As soon as it hits 4 o'clock, now 4 o'clock is usually benchmarking when they set the price for the day. Hedge funds use that price point to be able to work out exchange rates for different things. So as soon as it hit 4 o'clock, notice the strength of this candle here. As soon as it hit 4, bam, not a lot of pips, but we've had a drop of about 19.3 pips. Quite strongly. Every candle is red, apart from one. All right. So what does that mean? I believe that in this current phase, the UK knows that it is in hot water. Okay, me living in the UK, I can tell you for a fact that the UK is in hot water economically speaking, especially to do with the stuff with the supply chain issues that have been taking place. So the pound should be a lot weaker than it's been. And during the period of time where we had this news about supply chain and fuel stuff, we've had the price go short and then immediately take off long within the same week, which to me lets me know that the Bank of England and the powers that be in this country are doing the best that they can to rearrange the economy or pump enough money into the market to keep the pound afloat. Okay, but the US dollar strengthening that is going to increase over time, all right, is no match, or the pound is no match for it at the moment. Okay, and so the theory here is that as soon as the UK session ended around 4, the strength to keep the pound from dropping disappeared. And so what were the true direction that the market should be going in based on the technicals we've just looked at and the fundamentals is short. Now, I'm not particularly a fan of where the price gives the best entry on a Friday in the evening. That's not really cool to me. But if that happens, usually there is a re-entry on the Monday or the Sunday night. So even though the price has done what it's done, cool, it's done some movement, I am looking to see if the price will actually give us a re-entry on Sunday night. So this is one of the times where I say that you want to camp around Sunday night. For me, it's Sunday night, maybe Monday for you, but Sunday night, 10 p.m. in the UK, with the current time we have anyway, we have the new market week. So the first hour, of course, the spread is going to be crazy. So you couldn't enter even if you wanted to, or you shouldn't enter even if you wanted to. I should say you can actually physically enter, but I'm hoping to see that the pound will give us some sort of re-entry now, because on Sunday night, for us anyway in the UK, and if you're listening in from the UK, the Asian session is outside of the liquidity time of the pound versus the US dollar. There's not going to be much activity in volume because the UK and the US that's not our time. All right. So the pound USD, as we know, should usually move either in the UK morning or the UK afternoon. All right. And you can translate that into wherever you are in the world. So I'm expecting something on Monday morning. I think it'll be good to wake up if you're in the UK to be up early at 7 or 8 to see if the market will give us some sort of quick re-entry and then continue. All right. We had a similar situation when the price went short and the re-entry happened between the 7, 8 and 9 a.m. window on the Monday. All right. So you might have not got the top move, but you will catch maybe a retracement of 40 pips out of a 50 pips drop on Friday. So this is why I'm not going to fuss too much. I'm just going to let the price do what it needs to do. Obviously, if it starts to drop like, another 60 pips, I'm going to be worried because I don't want to get a late entry. All right. So pound USD has been interesting. USD CAD is starting to pull back. All right. Let's have a look here and have a look at other things that we've had. So AUDUSD, interestingly enough, has done a full return. So we've had in this spike, many of them, put this here, we already had many weekly highs here. So many weekly highs were run. So we had this high, which is the most important one for me, run with these spikes here, but the market made sure it done so and pushed up a bit high. Now, why did the price spike up here? I'll show you, first of all. We have a H4 supply zone, which the price grabbed liquidity from to be able to do this short. Okay. And if I go down to the lower time frames to the hourly here, you can see this is a bull trap. But if you look over to the left here, and at first it doesn't really appeal to the eyes, maybe the 30-minute will be doing better. All right. There is a flip zone right here in this range right here. So this is why the price returned here on the 30-minute. That flip zone, and the price will need it to go back into the other side of demand for supply to be active on that area. And this is why we've got the short. Now, again, it looks like one of those Fridays where the market is giving signatures for reversal at the end of the day, but I'm not going to buy that bait. I'd rather wait till Monday. Now with AUDUSD, because it is an Asian and US pair, it can actually move in Asia and give it an entry to go short. So you can camp around the markets at that time for those of you in the UK or wherever you are in the world. All right, let's keep looking and seeing what we have going on. So EURUSD, before I go into silver, I think was another interesting one. Now, I think the euro probably out of all the currencies is the most obvious one, that is quite bearish at the moment. Okay, I think it's quite obvious technically speaking and also fundamentally with everything that's going on. Now, just a quick recap on what we've had so far. So we've finally broken past this area of monthly demand here. And the price may not return to the other side, or it could do. It depends on the structure of the weeks that come along. But I'm definitely bearish on the euro. And as the US dollar increases strength, that is going to really affect the euro quite massively. But let's put this here, make sure we got it right. So here's the monthly demand zone. We've seen the price launch off for a long here for 2 months in 2020, reversal back into this same area of demand during 2021. So we had March and April long, and then we see a return back into this area in August. And then September confirms the bearish side of the market by closing strongly beneath. And so we should have a return now from the onset here as I've drawn it. Now, to make sure that this is completely accurate, I want to see what the close is of this day. The close of this day is 1.16425. So instead of a zone for a minute, I'm going to actually put a line here to represent the end of demand. So 1.16425. All right. And I want to see something here. So if we go down to the structure, so I am still right about what I was thinking. So the thing with EURUSD, which makes it a bit dodgy, not dodgy, but the price needs to give us one more long, to me anyway, from a structural point of view, is a few things. First, main thing is that on the return here, which is a natural thing the price should do to turn a supply or demand zone area into supply, we haven't had a return into this area of gray at 425 or above. The price came so close to it and then started to short. So this short here, to me, this is why with EURUSD, not much happened during the NFPs. I do think that there is a chance that there may be some sort of euro strengthening, which will give us a return back into this area. Now, I'm on the H4 right now, guys, and I think you should pay attention to this trade as well. The high of the week is just missed this area. So I wouldn't be surprised if the market into next week, EURUSD specifically, is behaving differently from other, I was about to say cryptos, from other pairs, and may have its own strengthening. And we can look into that by looking into next week. So for me, even when we do the weekly breakdown, I will definitely open up EURUSD and expand on it again. But from what I see here, the price hasn't really done much. Okay. And these highs here would expect the price to go for them. And any return back into this area of liquidity, no matter where the price wants to go, would be great. Now, I do think I actually covered this in the weekly area, but the last redistribution of liquidity was here. So a return anywhere here up to this range would be great. And from there, we should see a major short on EURUSD start to evolve. Now, again, the short targets I would expect the price to at least get back down to this area here at 1.11 and even further than that as more situations develop with, situations with the euro and whatnot. So I'm keeping my eyes on EURUSD. I don't trade it that often, I'll be honest. It's not really something that I go for, as a first pick, but I would say EURUSD has a very good opportunity providing the price does this. Okay, so we'll see what happens here and we can take it from there. Now, I want to just show you one thing before I leave off of here. And it's a trade that I'm in that I have been waiting for exactly 15 months and 10 months this year included. So let's have a look at this. And it is none other than silver. All right. So for me to show you this again, commodities are not available on my funded account. So I'm going to have to use now. If it was available, I would have taken that trade any day. I'm telling you right now, I would have. But let me go over here and show you exactly what I have. So as we would say, I have a trade entry that is within the wicks. What I'm going to do is I've been using peach because I think I like it a lot more than gray. It makes the charts a bit more alive to me. I don't know. But let's start this off first of all and look at the price action from the monthly. So last time I was on the live and I talked about silver, our good friend, Mr. Pi, Luca, was here. Now, again, in 2020, we had a very massive grab of liquidity, and among many of the lows here from 2015 all the way to now. And this provided a liquidity grab and gave us an injection long that we saw. Now, this grab of liquidity, we've had also a break of market structure. So if I draw this right here, we have a very strong break of market structure at the moment here that the price has fulfilled. And now to top it off in 2020, we had a reversal signature right here. Okay, and this structure that we had, all three of these, have produced what I can suggest is a very strong pullback before we get a massive long. Now, silver is a ticking time bomb, just like if you were on the Money Mike's channel, I talked about Ethereum. I really see Ethereum and silver alike in some senses, and Bitcoin and gold alike because of what they do. But anyway, this is the demand order block which triggered the long. And what I'm expecting, and this is why I'm in this short, I've waited such a long time for it, is the price to return back in this range here. I have targets for this area. Now, specifically, I'm looking for the price to get to about $15.81, all right, for specific reasons. But for at the moment, though, I am in this short, and I had to wait 15 months for the price to do what it's done. So why 15 months? Well, let's go over to the daily structure and see what's going on here. So on the daily time frame, all right, let's go back to, let me, if I can zoom out a bit. Yeah, here we go. Now, on the daily time frame right here, guys, this is July the 22nd. So on July the 22nd, that fateful day, 1 week before my birthday, the price did an amazing long, okay? Now, the price, if you notice here, now I don't trade support and resistance, but even if you're a support and resistance trader, you would see this area as a heavy area of support. The price bounced here for 1, 2, 3, I'm going to count this for you actually. So from July 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, and now we're at 15 in this month of October. So for 15 months, not that every single month the price returned into this area, but whenever this current market from where we are right now in July 2020 all the way to now, when the market was looking for an area of demand liquidity to push the price along, it came back to the same one spot, which makes it very easy for us to identify when we switch over from demand to supply. I was going to say from demise to supply, but that's another reason. Now, this is not investment advice, but I've said this to you already. You can do what you want with it. It is not financial advice. However, for me, I'm a great believer in silver, okay, because of the properties it has. And silver reminds me of, again, crypto, because opposed to gold, which is something that you hold on to and really only has not a few, but hardly any market use or any real life use compared to silver, which is burned constantly for us to have iPhones and a lot of the technology that we love and enjoy. And as technology increases, silver would, of course, be required more. I see silver in that way where it has a very good deflationary aspect to it. Now, silver, likened to gold, I think we know that silver is scarce. Gold is even more scarce, but silver being scarce and then being heavily used, all right, in the next kind of 10 years that we're moving into, will become a very bullish piece of price action movement moving forward as things develop. But anyway, why silver, first of all, short? And then I'll come back to the fundamental things. We've had a break beneath here. We've had a strong body close. First time we had that was the 17th of September. We've had the price break beneath here and return. And then we've had a larger short happen here. And then the price has returned for a second time. Now, this second time here is where I was waiting for an entry. And now that we've had this break beneath, now in supply and demand, when the demand order block or supply order block is being closed above or beneath by the body of the candle, when the price returns on the market order book, this range here between, I put this here, approximately $22.49 up to around about here of $23.06. That range right here on the market order book is being re-optimized or reused for supply. So this major area that the price has broken beneath has given us two things. It's given us a range of supply and also given us information that this market has stepped into supply areas that we haven't seen since July 2020, specifically the 22nd. So why are we taking the short? Well, when the price returns to the other side here, we should be looking, when the price returns, we would use this same region for a sell. Now, when I look at this, I heard Robert Kiyosaki talking about this yesterday, but he believes there's going to be a major crash. Well, he says in October. I don't know about October, but he says he's sensing a major crash going to happen on silver, gold, and Bitcoin, all right, due to debt, basically, because a lot of the money that is in the market at the moment is new, or what we call fake money from money printing. It's not money that's come from business or as money is supposed to, but this is currency, I should say, that's come into the market from stuff like stimulus checks and massive loans that the rich are taking because interest rates are low. And so that's propped up the market, but only for so long. All right. So to me, when I'm looking at this and what he's saying October, but the way the price has actually done, I don't even know if he's a technical analyst or something, but I would say that the opportunity that he's talking about for a major short is great, because if he's going to do what I do believe he's going to do, and I didn't know about the crash or any of these things he was saying, but I just heard it on just randomly yesterday. The price going short, the way I can see it going short, to the left of us, the next area where the price may even have somewhere to pause is the next demand zone down, which is all the way back down at 19. So at least from the short entry we have of $23 approximately, right at the top there, all the way down to $19, let's just call it $19.10, is approximately 3,910 micropips or 309 pips to about 400. All right. And I still believe that the price has even further to go. Why? Because we have liquidity gaps here that haven't been filled out. You have to remember, there was a lot of liquidity being driven into the market at this period of time because of, what happened with Corona. So After the crash we saw when the price got to, unbelievably low levels, we've had an injection of money come back, come into the market, and some of that move has caused some gaps on the market. And this gap here at $16.50, around about $16.63, is where I expect the price somewhere in this region to get to. Okay. And so this is why I'm taking this short. This is a major swing short, and I won't be closing it. Now, for those of you who knew about the legendary gold trade I gave right at the top, right to the bottom, it was an absolutely fantastic trade. I believe silver is presenting the same opportunity. And I'd really say that this is going to be one of those trades that do build wealth for you. All right. Now, I'm going to show you my entries here. And it's very interesting because I talked about this for weeks on end. And again, the NFPs, guys, always remember that fundamental news, okay, is designed, especially data news. You have to remember the data news that comes out, there are people and powers that be who know about that data, the data points, what it means to the market, how the market will most likely interpret it a lot, way before we see those results. We're usually, as retail traders, the last people to see the news. So silver, we already know the price is going to go short. Yeah, that's already a thing. All right. Now, since silver, we know it's already going to go short, what happened this week? Well, for this short trigger to happen, as I was telling my academy students, there has to be a level of trigger points, in essence, for the price to do such a, a reversal as it's about to do. Now, for the most of the week, literally from Monday all the way until Friday, silver has been in a range of accumulation. This was the first major sign that this is most likely the entries for this massive opportunity short is going to happen this week. So we had an accumulation here. And then until the NFPs, which is what, for me, about 4 hours ago. All right. So near the very end of the market, this is where we had this spike here. And this spike did what? Number one, it took the high of the previous week. Now, number two, which is even more powerful, is that this spike right here, this initial high right here, this spike, okay, the market filled out the wick and just came for the high. So any orders above this area or in this region have been cleared out. So you can call this a mini reset on the market order book. And this exactly was our entry that I gave a call to for, days on end, but I gave the actual exact call to my students and they've all in that trade. Now, if you want to see that, I can show you guys later on. But right now I'm in silver short, and I do believe that the price is going to continue rallying down. Now, my stop losses are at even, okay? Now, every broker is different, and I am hoping that I can continue to swing this trade without running into any issues with the spread. So what I may do, and this is not something I would advise to do regularly, but because of the way Hugo's way can be sometimes with the spread, I may actually take off my stop losses just before the end of the day, okay? And that will just allow me, because this entry that we have here is the exact entry that we're looking for. And I don't want to get stopped out because of the spread. I'd rather be stopped out because the market actually continues going long, which I highly doubt. However, I would rather do, my due diligence here and actually go for making sure that we stay in the position here. So here we go. The price at the moment has pushed very strongly short, and gold has followed suit. If I quickly go to gold here, gold actually came back to the return entry right here and did a short. It's already done 212 pips, and I believe it's going to do a whole load more. Okay. Now I'm upset with myself because I was so focused on silver that I missed gold, but it's all right. I'd rather load up on silver. I mean, gold is always a step ahead of silver. And that brings me to my next point. Okay, so coming back to the fundamental side for a moment before we go over the technicals. If I go right back here, okay, to the monthly, let's have a look at the price of gold. I mean, I may even use TradingView to go over the history of gold even better. I think that might help you even more. Let's be a bit more, I think I'll expand. Let me go to TradingView. Just give me a moment, guys. And let's take a look at TradingView and let's look at silver from that standpoint. Okay, now usually when I use TradingView for silver, I usually like to use IDC, all right, or something that has price feed for at least from 1971 or so. All right, so this is kind of my my thing that I like to do personally. Okay. So let me pull up this on TradingView and let's have a good look at this so that we can have a picture of what exactly is going on here with the price. So let's zoom out here, see how far I can even get to. Yeah. All right. So I'm sharing my screen. Let me switch over. All right. So now it looks like just squiggly lines here, but you can see that there's price information on silver all the way back over into 1802 when silver was about $1. Oh, I hope that's the right scale because it's saying 1802, but then it says January 02. But anyway, 52. Okay. Oh, yeah, it is January 02. It would be because it's 1902 or 1802. All right. So let's look at the price feed here, and it's going to shock you about what the price has done. So let's start off from this period here, 1970. So what was the economic climate during this period of time? Well, during this period of time, the economic climate was President Nixon. And of course, silver wasn't part of the gold standard system, but silver was still seen as an asset, just not as valuable as gold, okay, but still very valuable. And we see that during the period of time here where inflation actually went through the roof, silver gained massive amounts of price movement, where we saw silver go down from, in 1971 in December, 1 ounce of silver. Now, if you're not too sure with commodities, okay, usually they have a measurement, standardized measurement. So for example, for silver, it'll be 1 troy ounce of silver. Same thing for gold. 1 troy ounce of gold gives us the price that we see. So here, 1971, literally silver was just over $1 an ounce, okay? And by 1979, so just 8 years later, 1 ounce of silver went up to $48 before the price came crashing down, and we saw silver get back down here to $4.74 by 82. Now the price descended lower again. You know, during these periods of time, inflation, you know, and interest rates and stuff were favorable. Okay, and the market was doing well. All right, price stayed quite low. All right, we have a liquidity gap here at 11 cents that the price filled out later on. And this is why sometimes going back far in history is definitely going to be helpful for you to understand what, you know, the market is trying to do. All right, so again, we had another period here where we had massive, the price of, you know, if you look at this range right here, let's just say from about 86 all the way until July 2005. So for 19 years, the price of silver basically didn't do much. It was within a fixed range of about $3.04. And at the highest point, it got up to about $8 for 19 years. So this is why do I say this? When it comes to investing, guys, there's the long game and the short game, and you have to be prepared for both. Okay. And I'm sure there's many fundamental reasons for that. To me, it does look artificial because silver has been burnt. Now, you have to understand, my background is in chemistry, and I do thank God for it when it comes to commodities. My degree is in chemistry and my master's is pharmaceutical science. But I did spend a lot of time with things like silver because you need it for something called a precipitation test. Okay, and it's just something you use to find what we call halides or halides. But without going too geeky on you, silver, okay, I've never used any mixture in the lab of gold, anything, apart from probably gold nanoparticles, which I didn't even do myself. It was PhD students and it was very few and far between for very specific purposes. But in general, silver was used more commonly, which means that silver is irreversibly used. Okay, why it is because the silver is used in different processes. You even have things where silver gets hot enough that it actually becomes a gas in some places, or it gets bonded irreversibly to certain compounds. And if it's a gas, it can escape and leave the atmosphere. If it's irreversibly, you know, used or is what we'll say is denatured or deteriorated, then it can't be used. All right. Whereas gold is not the same. Gold is very inert. It's inert to everything. Silver is not. Silver, if you leave it in the air for long enough, it can have a green tinge on it, which comes from the sulfur in the air. Whereas gold is inert to everything. So silver as a industrial purposes, you know, real life purposes in that sense, has a lot more use. And therefore, in a sense, you can say it's being burned. all right, or the total supply, in other words, is going down to an extent irreversibly. Okay, of course, chemically speaking, it's very expensive though, but can be done. And so it's kind of a thing of money over the matter. I don't think the sources of silver has got to the point where people are going to be willing, or, big money is going to be willing to risk irreversibly, I don't want to say, irreversibly extracting silver, or extracting silver that is almost irreversible to extract, I should say. But anyway, during this period of time, we saw the price spike down 2008, which is when we had the next market crash. Price dropped from 21 cents down to the lows here of 8 cents. Oh, excuse me, not 8 cents, $8, $8.38, up from $21. All right, now from there, we see that the price shot up. Now, this shooting up here is due to inflation. Between 2008 to 2011, inflation went through the roof. And at that point, this is where we have the newest, or the current all-time high for gold. So silver made a new all-time high, and so did gold. All right. Now, gold's all-time high that happened in 2011 has been topped, and there is a higher all-time high right now of about $2,075. So what I'm going to do here, excuse me, guys, gold and silver, keep mixing them up, but I think you understand what I mean. I think I can just change it from here. If I just change GTU, I believe I can get silver up. Let me see if it will work. There we go. So that worked there. So if we look at the same period of time, I'm just going to zoom out here. So gold, we see a much larger spike due to, what gold represents as money, but we see that we had inflation again, same 2008 around August. Price went from $730 all the way to almost 2K. All right. Now, during the coronavirus period into August and September, we see another all-time high being created for gold already. Around about, now, according to this chart, the all-time high is $2,074.10. All right. Now, silver, and this is where the theoretical part comes in, and I'm not a conspiracy theorist, but this is an important point to make. Because silver has a lot more use cases, literally as tech increases, the amount of silver required will increase. And as the world is phasing into this period of time, which is into green energy, one of the biggest aspects of green energy is solar energy. Now, solar panels require quite a bit of silver in order for them to work. Okay, and so that means the demand for silver is gradually increasing over time and will continue to increase. This is why countries like China are trying to stock up on commodities as much as possible, because there is a chance where there will be a massive commodity shortage. Now, what does this have to do with you? Well, when we look at the price, gold and silver follow each other to a certain degree, but gold, which is widely known in the market, always has a faster move or a faster reaction. So gold is more the leader, and silver follows afterwards. Okay. So we see right here, the all-time high made for silver was in the month of, if I get this right here, was in the month of April, according to this. Let me just zoom in to make sure. Yeah, the month of April. So in the month of April 2011, this is where we had the all-time high for silver, current all-time high for silver created. Now, with gold, all right, the current all-time high during that period, it was still 2011, but in this case, silver was actually ahead of gold. The all-time high was formed between the months of August and September. So this case, silver is ahead of the game. All right. Now, it makes it even worse, and why I believe that the shortcoming that is the last major short before a massive long, okay, is the fact of this. Now that gold has done this movement here, silver was a bit earlier to the game, about 3 months earlier to the game, or 2 months earlier. If silver made this first all-time high the way it is, how come right now silver's the maximum is done so far for the year is $30, whereas, and this is even in 2021, in 2020, during that same period of August, silver only went up to $29. Okay, so very far away from the all-time high. Now, to me, this is market manipulation, and I believe it's because the true demand for silver is hidden. That's what I personally believe. Now, we can go and ask Peter Schiff because he's the main expert on silver and gold. But to me personally, I think many countries and companies in different countries always keep how much silver they need a secret, because if the true demand was known for silver, I don't think the price would be $22 and even less coming forward. But I'm sure a day is coming as blockchain information comes out from blockchain, and things can't be hidden, and sooner adoption of silver comes along. I think that the truth about everything will come out over time to certain degrees anyway. But why am I saying this? Well, silver, first of all, is presenting the last opportunity for a major short, which I believe is happening as we speak. And then at the same time, once this short is completed and we have this last buy, which is where I'm aiming to actually buy silver coins, not silver bars, guys, because remember, you get capital gains tax if you buy silver bars. Silver coins, because it's money, you can't tax money, so you don't get taxed if you try to sell them to get some cash. All right, so always keep that in your mind when it comes to silver. Now, it's not financial advice, but it's just the facts of, I'm just stating facts, okay? So, based on what we've seen here, now the all-time high for gold, the new one, is not too far off the old. It's literally about $100 more at best, okay? So if we're to do a scale factor here, if the all-time high previously was about just shy of $50, $49.94, or let's just round it to 95, I do believe that once silver drops to these levels, there is at least a chance for silver to get at least up to about 55, before any sort of drop. Now, because there's a constant demand for silver, even more than gold, I'm not surprised if silver is worth $100 per troy ounce in the future. Now, of course, different crises have to happen for that to take place, but as the world keeps moving towards greener things and greener energy, is always going to require silver. So for me, I believe in this year and into probably early 20, depending on how and when the price gets here, this kind of range between $16 down to the lowest point of about $14 is really the last chance to grab a cheap amount of silver before things get really expensive over time. So for me, this trade means a lot more than just me making money on the markets, but it's a signal to me that we have one more opportunity before a massive push down. And I do think once silver starts to make these highs, because of the demand it has in the industry, I don't think silver is going to be coming down in a hurry. I do think that silver will be making some exponential gains moving forward, especially as the narrative have changed. And in this case, we have a new all-time high, but not one for silver. I do think this is manipulative, but once that's broken, or countries or whatever happens, silver is accumulated as much as possible, or some sort of situation happens that requires silver, I do expect when the price gets here to give at least a quick FOREX. Now, for me with silver, I'm not going to be holding silver the same way I'm holding gold. Robert Kiyosaki gave really good advice, which you don't have to take. It's not financial advice. It's just what he said. Gold is for saving, and so is Bitcoin, and silver is for spending. So with silver, I want to put my money into silver with aims to, grab as much currency of the day in the years ahead. With gold, I'm going to save wealth in there and also have the digital version, which is Bitcoin. But silver is for spending. But even then, if you want to spend and you want to have somewhere to put money in for the future, definitely gold. I think definitely silver. I definitely want to be buying, as much silver as possible. And I'll say definitely do so. And my advice to you guys, when you do get the silver, do not hold it in storage with any company, because there are options right now where companies are doing something which could fall back on their faces very soon, where you can buy silver and they hold it for you within a vault. But I always think about, the worst comes to worst. What if for some reason, any reason at all, things crash and companies go out of business? Your silver is still in their hands, and it'll be an easy thing that they can liquidate to kind of, solve some of their losses. And you would never know. They'll just say, sorry, we've gone bankrupt. So for me, seeing is believing. Until I see the silver in my hands, in my room or wherever I am, it's not in my hands yet. So for me personally, if you're going to buy silver, I would personally say, if it were me, make sure you get that silver delivered to you. Even if they tell you it's going to take 3 weeks, I'd rather it takes 3 weeks than I never see it. But I hope you guys enjoyed that and you've taken something away. And I'll catch you guys next